Hi everyone, what is up? Welcome back to the channel. I'm DELA right here again. If you're new here, I want you to hit the subscribe button, like, and leave a comment. Now in today's video, I'm going to be teaching you my simple scalping strategy. Should I say my simple scalping strategy that led me to win Kojo Forex in that particular live scalping challenge. So without further ado, let's just dive right into video. But I really remember so well when I was starting out my trading journey, I really did not have that huge capital to be able to swing and then day trade. So I was only focused on how to scalp my small gains into significant gains, withdraw them, use them for something reasonable, or to build my actual trading account, right? So I set myself on challenges like turning 500 cedis into 1,000, 500 cedis into 2,000, $20 into 200. If you would like to check out those videos or those particular screenshots of those particular flippings, you can follow me on Instagram, check my highlights. You're definitely going to see it over there. So without further ado, let's just dive right into the video. Now for the purposes of this video, I'm going to be using Euro USD because I want you to understand that this works on all pairs. Now a lot of people think that because I trade only gold, I probably do not know how to trade other pairs. No, that is not the case, right? So now the most important thing is that, or the first rule of scalping is that you need to understand that market structure is market structure regardless of the time frame. Now for the reason of scalping, we are going to be using the 5 minutes time frame and the 1 minute time frame, right? Now the first of it is all that we want to identify the structure of the market on a smaller time frame, which is the 5 minute time frame. We are not going any further. Now as you guys can see from a clear structure over here, we can see that this market has been trending to the downside, or if possible we could look at this particular area and then mark out this zone like this, right? So this is more recent, right? Now if you watch my earlier videos, I taught you guys about a trend line strategy, about a third touch where we see price hitting the trend line, the first touch, the second touch. If you've not watched that video, kindly do so. I'll leave a link in the description, or I'll leave a link somewhere around this point so that you guys can check it out. So now with this particular simple system, what we should be expecting is that should we expect price to push back into this trend line zone and then drop. Now this is just one particular system, but we also need an added confluence to help us on this system. Now one of the other confluences that we want to actually look out for how price is reacting on these structural levels. When I say structural levels, I'm looking at these levels that price turned, or the most important zones. Now we can see that price got to this point, it reversed, it came to this point, it reversed, came here, reversed, came here, reversed, came here, reversed, came here, reversed, right? So these are the structural areas that are highly important in the market, right? If I would, I'm going to mark this out right here like that. So these are areas where I definitely would be interested in taking my trading opportunities other than any other place in the market, right? So I'm going to mark out this whole area. Sorry about that. I'm going to mark out all these areas just like that, and I'm going to be waiting for price. Now because I've already determined that this market is heading to the downside, I'm going to be looking out for sales on this market predominantly because I want to be scalping huge profits, or maybe probably holding on, because most of the time there's going to be an impulsive move and then there's going to be a corrective phase if the market is heading to the downside. And when the market is heading to the downside, the impulsive moves are going to be more. So I don't want to be catching a scalp in the corrective phase because it's going to slow the process, right? I don't know if you got what I'm saying. If not, kindly replay and then listen to that twice, right? So now that I've done this on the 5 minutes, I'm going to come to the 1 minute time frame because that is where I'm going to be taking out my opportunities on the market, right? Now we could see over here that the reason why I already called this market to be on a downside. Now let me come back to the 5 minutes, draw my trend line clearly, and have that waiting for me somewhere around here. So we can see the first touch over here. Now you have to do that with the wick. Second touch over here, and then we should probably be waiting for a third touch. Now we are just not going to just wait for a third touch, but if the third touch coincides with a key level, then that is actually a significant trading opportunity for us. Now you can see, as I said earlier, market structure is market structure regardless of the time frame. Now we can see over here price was clearly pushing to the upside, showing us higher highs, higher lows, higher highs, higher lows. Then what do we see? Price created equal lows, equal highs over here, which was clearly close to the trend line but failed to touch it. And then what do we see? We saw a drop. So if in any case there should be a pullback into this region or even into this trend line and then dropping all the way down. So this is how I actually look at the market. Now I know that in as much as this market is moving up, it is in a corrective phase to the upside, but there should be some sort of strong momentum candle pushing us to the downside because of the structure or because of the trend of this market, right? So I personally, I mean, if I would want to take buys on this market, I'll predominantly not go in hard on this market, because at this particular point I could easily tell that this market is ranging in this side. So I'll be waiting for a strong break of structure, and then possibly I will jump in, maybe wait for the market to, coming into these highs over here. But I'm not really like interested in that at the moment, right? I'm not interested in this particular area, but this is simply one of the systems you can use where you can draw like a consolidation box in that particular zone, wait for a breakout, a strong breakout, just like I have shown you, and then you take a trade. Go for a good risk to reward of 1:1. Right now, it's very important to go for a risk to reward of 1:1, because when you are scalping, you definitely do not want to stay in the market too long, right? You want to go for a good risk to reward of 1:1, stack in that position, and then get out exactly at a good risk to reward of 1:1. Right now, as you can see, our TP has been hit over here. Now price is at our key zone. Now it's very important because it kind of aligns with our trend line, if you will see, right? Now if I draw an inner trend line from this point to this point, you can see that the market just came to tap in on this trend line and worked into this key zone. So now this is also a good opportunity for me to jump in on this trade over here, right? And my stop loss is going to be over here, like quite a bit above the structure. And I'm going to now, when you are scalping, there's one thing that I want you guys to know. When you are scalping, let's say the market is trending to the downside and you are scalping for buys, you want to go for a good risk to reward of 1:1. But when the market is moving to the downside and you are scalping for sales, you can go for a good risk reward of 1:2, because I said earlier that the momentum phase is in the trend of the market. So most of the time, the market might go in your favor. So with this, I will go for a good risk reward of 1:2, and let's see how that goes. Okay, so currently, oops, the market really just hit us. Now, this has to do with patience as well, right? I probably did not even know this, but now let's look at it closely. Now, you can see that the market actually violated this particular trend line, right, and came into this trend line, which also coincided with the 3-touch rule that I explained to you guys, and we saw that strong momentum candle. So let's say we took a loss over here. Let's see how this actually goes again. So we jump in for another opportunity, knowing well that we know what we are looking out for, and then go for a good risk to reward, and let's see how that goes again. Now eventually this goes for us in our favor, and then our risk to reward of 1:2 is being hit, and then we take profits, and then we are out of the market. So one thing to learn from this particular simple strategy is that market structure is market structure regardless of the time frame, and then we want to follow the trend of the market even when we are scalping. And when we are scalping, we want to go for a risk to reward of 1:1. When we are scalping in the opposite direction, we want to go for a risk to reward of 1:2 when we are scalping in the trend of the market. So thank you guys so much for watching this video. I'll see you guys in the next one. My name is DELA, the market god. Peace out.